What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. I know it's been a while since my last video, so today I'm going to tell you what I've been up to. I want to do a Ravencoin analysis and a Bitcoin market analysis. So with all that being said, stay tuned. I'm going to be right back and I'm going to go over everything. All right, everybody. You all know the drill. I'm not a financial advisor. This is not financial advice. I simply share my technical analysis in hopes that you use it as you see fit. But remember, you manage your own money and you manage your own risk. However, if you like these videos, please hit the like button, subscribe to the channel, all that good stuff. It is all greatly appreciated. Also, if you are on Twitter and want to follow me at MarkTheDGT. It'll be linked in the description below. Real quick, speaking of Twitter, I want to go over this tweet really quickly because Leon Ravencoin is a massive advocate for Ravencoin. If you're on Twitter, you should follow him, especially if you're a fan of Ravencoin, if you're a Ravenite. But I want to share this really quickly because I guess as of today, Ethereum has their plans to end mining and be moving to proof of stake by June. So for Ravencoin, that puts them as probably the most profitable coin to mine once Ethereum is completely out of the picture. Also in June, it will have been 6 months since the halving. Leon believes, and I would agree with him, that the market will have noticed that there are 650 less new Ravencoin, and this is a huge consequence. There'll be 650 less new Ravencoin than 6 months into last year or any year previous, and with asset creations burning 500 Ravencoin per asset, this could be huge. It could take 6 months, it could take a year, but eventually the market will start to see the deflationary value of Ravencoin and the price will move accordingly. I am 100% firm believer that the price will move with the deflationary value of Ravencoin. I just wanted to put that out there because I saw this tweet, I retweeted it, I quoted it, and I really liked it. And I retweeted it with a quote tweet because I also truly believe that this is why shutting off miners now, while the profits are a little down, seems to be insane to me, because if you would buy the dip, why not mine the dip? Especially when you know that the halving is typically on every other coin that's had it is a point to make profit. There will be an increase in value at some point after the halving. Almost every bull run for Bitcoin is in line with a halving. So just keep that in mind. I don't understand why the market or why the mining difficulty is so low. And you see here the Ravencoin mining difficulty is at 69K, and it was peaked, at almost 140K, like 136 or something. And it's been well over 100K for almost the entirety of, from, let's say, August to just before the halving. It's been, right around 100K in difficulty. So now it's really not that big of a difference in your yield. You're still yielding the same amount of Ravencoin as you were pre-halving, or at least close to it. And I think that's huge to keep your miners running. Not only to strengthen the network that is what I believe is to be a strong network and a worthy cause, but the value will be there. Right now it's just stacking. It's like an accumulation phase for miners. So I really do believe to keep mining. We're going to go into the charts now. I'm just going to get off my high horse here. I haven't done an analysis in a while. I haven't made a video since Sunday, I think. And part of the reason why is because this market, and we're going to go into Bitcoin and kind of see this real quick. This market has put me in a position to where I am at work. I do industrial maintenance. I work in a skilled labor position. I do fabrication. I rebuild gearboxes. I rebuild major power presses. And with that being said, with it being skilled labor, I kind of have free reign to say I work as much overtime as I'm willing to put in, as much as I'm willing to get done. There's always work for me to do. There's always something in an industrial setting. There's always something to do. So I am at this point trying to hit 20 to 30 hours of overtime per paycheck, because I think 6 months from now we hit bottom and there will be the opportunity for life-changing money. If you can find a way to put a substantial amount of money into the market, and this is me, this is not financial advice, this is me, this is my plan for myself, is to work as much overtime, stack as much money as I can over the next 4 to 6 months, however long this goes before it bottoms out, and watch the charts very closely to wait for bottom. and then put money in to make long-term, potentially generational wealth. That's my plan. That's what my hopes are. And that's why it's been a while since I've made a video. And it might come to the point where I make videos, Thursday, Friday, and then make one Sunday before the week. Friday night, I can't work late because we close the plant down. We close it down for the weekend. And, I always try to make a video on Sunday to start the week. So it might be a Friday, Sunday deal. But with the personal stuff out of the way, think about that. Think about the potential of this bottom. Think about the money-making potential that could be legitimately life-altering money. I see Bitcoin, I see a big bear flag for Bitcoin, honestly. And there's a lot of people calling for a rally up to 44K, 48K. And I honestly, I don't see that happening. I don't see us breaking the 200-day moving average at 43. And I don't see us even getting to that point, because I think we're going to kind of do a double take of what we did at the end of December, so almost a month ago now. Wow, it's been a while. This trend has been going on for a while. But we broke down and we broke 52K. And 52K was the bull market support band. That's right what I was talking about then. You gotta get back to 52 because that's the 21-week EMA or the 20-week SMA and that bull market support band. And we went sideways, and we had this nice little pump. But we had this pump, and it wasn't really much volume to it. It was just, nice price action. And then we got to where the 52K met the trend line, and you see we tanked off it. We hit it, we wicked down hard. We had this rejection wick, this long wick off of the support resistance, 52K plus trend line, and we sold down. Then we broke the 200 moving average at 43, and then we had 39.6, and I was one of the people talking about 39.6. If this breaks, we have no more bull market anything to talk about. No one can be bullish below 39K, below 39.6, because that is the previous swing low. Now we have broken structure. We are no longer making higher highs and higher lows. We have now officially made a lower low on a macro level. This is definitely bear market territory. And now what I see is a bear flag slowly moving up with next to no volume to a point where I think we will hit 39.5, 39.6. We will test the support resistance and the trend line at the same time. We will bounce off and we will fall flat. And I think that the only thing that will save us from going down to 30K even is I think that there is still some potential liquidity between 33 down to 32. Like this range here, there's still a lot of liquidity here. I mean, this big buy volume here, it wasn't like it was a big buy day. It was a big sell-off that hit that level of liquidity, that hit those kind of preset buy orders and got a real big bounce up. It was just like this here, like this buyback were preset orders. This was people looking for bottom and just having orders preset, and you hit this whole big level of liquidity where buys just flooded in, and this wick was only a few minutes before it bounced right back up. So here I think it's the same thing. So there is a potential for us to get another hit off of here, reject, come down, and then wick up out of here and still trade around 34 to 35 for a little bit and then stay kind of in this range so we hit the trend line again and break back down. Eventually this liquidity will dry up because it was the same thing that was here when we kept tapping 40K. It was the same thing when we kept tapping 46K and 45K. The more we hit it, every time we hit it, the buyback got a little bit weaker. So this range here at 46 down to 40, 45.5, tapped it and bought back up the next day. And we tapped it and we got a green candle, tapped it, got a green candle buy up, tapped it and we stayed on it and we kept staying on it, and then we broke off. So the bears actually held more pressure. The sellers were able to keep the price suppressed close to this range, just sucking the liquidity out of this range until it eventually dried up. So I think something like that would have to happen over here. We'd have to come back down to it and then sit on it for a while before we break down again. but I don't believe we've come near the long-term bottom yet. I still think that we are looking at potentially a 20K or a sub 20K Bitcoin in the long term by middle of the summer. All right, so now on to Ravencoin, because Ravencoin has done something interesting. Ravencoin has actually potentially broken this downtrend, and I set up a post on YouTube about this earlier today, but the only concern I have is that this would now be the second touch of the downtrend, in which case this price could wick and reject off, or this could be just where the trend line is, and this is the trend line here instead of here. I made what I believe to have been the trend line, and I made to where I believe it would be as far as just the angle of the price action, but this could very well be wrong. So take this with a grain of salt, that right now we've got good price action, and the price seems to be doing what we want it to do. But I'm going to give a quick range of where I believe prices could go if we get a nice bullish push. But again, we're really low on volume. We're low on volume, so I don't see too big of a push coming. But if we were to get that pickup of volume, I think our next substantial resistance would be around the 21 smooth moving average, about 8.667 cents. And if we don't get that and we reject and come back down, I think that the initial rejection over the next 24 to 48 hours would put us no lower than this wick down here. This seems to have been a nice kind of support resistance line that we would retest again if it comes down at about 6 cents even. Yeah, let's call it 6 cents even and say that's our range from 6 to 8.66. And again, this will determine whether or not this trend line is accurate and if it needs to be adjusted. Don't hesitate to adjust trend lines, not at least until you have 2 to 3 touches on it that you know were hard rejections. And I'm going to go back to Bitcoin just briefly, just to show you what I mean. This was our all-time high, so I'm not going to start it here because this was still obviously part of the uptrend. Down this first rejection of a lower high, so high came down and it made a lower high. So this is the start of a potential downtrend. So here, this wick off here, this rejection of the trend line, this wick rejection of the trend line. So now I am confident that this trend line is accurate and that this is where these sellers are coming in to push and suppress price down. So I'm confident in this trend line now. Ravencoin, not so much yet because I don't have the second, third, fourth touch yet. So I can't be as confident. But with that being said, right now the price action is looking good. We want more volume, and if we get strong volume, we could push up to 8.6. If we don't and we reject, we could go back down to 6 cents even. That would likely indicate that we're entering into a next leg down scenario and pushing down towards new lows, potentially below 5 cents into the 4 cent range. So with that being said, guys, that's the video for tonight. A little bit longer than typical, but a lot of information to go over. If you enjoyed, again, hit the like button, subscribe to the channel, all that good stuff. And as always, until next time, peace.